How's it going, everybody? KCG Trades here, and welcome to another stock market outlook and weekly watch list video. And getting right into the market, we are noticing a bunch of new leadership forming, while old 2020 leaders are breaking down and losing a lot of its momentum that it had the past year. So like I have been saying, it's time to adjust and get over the old leaders of 2020 and pay attention to the new leaders of 2021, because you don't want to be stuck in the past and miss out on a lot of good opportunities that are presenting itself right now. For example, last year's leaders really focused on the COVID beneficiaries, such as stay-at-home stocks, software as a service stocks, social media stocks, stuff like that really benefited from COVID. But now that things are starting to open up again, vaccines are coming out, and the world really trying to get back to normal, we're seeing new leadership forming in things like construction, retail, steel, building, residential homes, a lot of sectors like that. Those are the stocks that are really showing new signs of leadership and accumulation. And especially the oil and gas sector, they have been doing very well over the past few weeks. And I know a lot of people think that these stocks are primarily value stocks, but the stocks that are actually showing signs of accumulation actually have the fundamentals to back it up. And that's what we'll be focusing on moving forward. And to give you guys a better example, I'm going to show you guys a few names that have been showing great signs of accumulation, that are in the top leadership groups, and also have great fundamentals to continue its move going forward. Starting with, we have ATKR, is a construction company, huge uptrend, great accumulation volume, and really has no signs of slowing down. We have ASO as well, which is a retail company, Academy Sports and Outdoors. A nice uptrend, basing a few times, but has great volume accompanying it as well, and great fundamentals. We have Crocs, one of the best fundamentals out there right now. A nice base that just broke out into new highs. I do have a position in this stock that I've just recently bought over the past week, but volume is also accompanying it. So this is definitely one of the leaders right now. We also have EOG, which is an oil and gas company. Huge prior uptrend, broke out of a nice base on strong volume on Friday, now in all-time highs. We also have LGIH, which is a residential homes company, which is showing a great uptrend, basing for a few months here, and then broke out on good volume, and then now has just been chugging along higher into all-time highs. We have LPX, which is another building company, strong prior uptrend, good volume accompanying it. We have RH, which is another retail company, showing great signs of accumulation and looking to actually break out into new all-time highs pretty soon. We also have STLD, which is one of the strong steel names, showing great signs of accumulation, strong volume, and really strong volume patterns right now. We also have HZO, which is a retail company, just broke out into all-time highs last week on good volume, so let's see if it can continue its move higher. And we also have financial names like JP Morgan, RILY, that are showing great signs of accumulation and actually are in all-time highs. So these are the names that we're really focusing on and want to continue to look at moving forward. So now taking a look at the overall market, starting with the NASDAQ. Let's take a look here. We have this kind of double top that occurred around the 14,211 zone, and then we did pull back to the 50-day moving average, which actually coincided with this prior breakout here. As I mentioned last week, that I wouldn't be surprised if this actually happens. It did that exactly, and the good news is it bounced right off the 50-day, retested it about 3 times, had a beautiful hammer candle on Thursday on good volume, and on Friday we actually gapped up a bit, but found resistance around the 10 and 21 EMAs and closed. We didn't really do much on Friday, but we do have a little gap here on from Thursday to Friday, so wouldn't be surprised if we actually fill the gap, maybe retest the 50-day one more time and then bounce back higher. That would be the most ideal situation. It would be healthy if we could fill that gap, retest that 50-day one more time, and then chug higher and get above those 10 and 21 EMAs. That would be something I'm really looking for, but right now the NASDAQ names are kind of lagging a bit compared to the Dow Jones and S&P 500, but let's take a look at the S&P here. So the S&P has been chugging along much higher, really closed into all-time highs on Friday on solid volume. We haven't really gotten that higher low that I've been mentioning, but it has just been consolidating over the past few weeks and then broke out on Friday. So the names that are in the S&P are doing very well, and we are seeing some strong accumulation happen in those names that I've been mentioning. So I wouldn't be surprised if we actually continue higher, but there is a disconnect with the S&P and the NASDAQ. S&P is in all-time highs, while the NASDAQ is around the 50-day moving average. So there is a bit of a divergence there. If we take a look at the Dow Jones as well, we do see Dow Jones in clear all-time highs. So with the S&P and the Dow Jones in all-time highs, and the NASDAQ at the 50-day moving average, it does cause a bit of a disconnect, which is why a lot of people feel out of sync with this market. And if we take a look at more of the growth indexes that we want to pay attention to, IWM, the Russell 2000 ETF, has just been consolidating, going sideways. Not much action really going on there. The IWO, which is the Russell 2000 growth, really no traction, kind of on a downtrend here, making lower highs and continuing to make new lows. Had a really bad low on Thursday, but then we recovered nicely, but the volume was higher on Thursday compared to Friday, so that is some concern there. If we take a look at ARKK, it actually is below the 200-day moving average and got resisted by it as well. So this could be, some trouble ahead. Anything under the 200-day is very troublesome, especially if it's resistance. If it's now resistance on strong volume, so wouldn't be surprised to see ARK continue going lower. Even if we take a look at the IBD 50, it's kind of in no man's land right now, trying to figure out a direction. It's very choppy, up and down, we thought it had a nice breakout, but then just continued lower here. And we had a high volume day on Thursday when we had that big shakeout. So right now for growth names, the traditional growth names that we're accustomed to, it is a time to be staying away from them. Let them continue to base. A lot of them do have really strong fundamentals, so it's not over for them. It's just not the time to be buying them right now. If you're traders, maybe for investors, you could find some long-term opportunities in a few names. But for us, we want to have the least amount of risk and find the stocks that are making new highs and showing signs of great accumulation. With that being said, though, we do really want to look at individual stocks first, look at how they're acting, and then look at their group, and then look at the indexes to see if it's cooperating as well. So in my weekly watch list, I do have about 8 names I'm watching. I have a few NASDAQ names, but I also have more of the leadership that we're seeing now. So let's just get right into it. Starting with AMAT, Applied Materials. So as I've been mentioning, pullbacks really are the bread and butter right now because breakouts are still having some trouble, but the new leadership are actually showing signs that breakouts are starting to work. But for Applied Materials, which is more of a semiconductor name, it did find a nice bounce off the 50-day moving average, which coincided with the previous breakout area. And it did find a nice pivot around the 10 and 21 EMA on Friday. Volume wasn't as great as we saw on the 50-day moving average pullback day, but that is okay. We're essentially looking for a breakout of this downtrend line here, get above all these moving averages, and then essentially retest those highs. So I'm looking for a move above the 134.50 area, get above this downtrend line, and then hopefully we get some volume coming in, and then break into retest of those highs. And the next stock I'm watching is CPE, Callum Petroleum. So CPE is probably one of my favorite setups going into next week. I had a nice bullish engulfing candle on Friday. This is an oil and gas name, so one of the strong leadership groups in the market right now. I had nice volume coming in on Friday. As I mentioned, a bullish engulfing candle, which almost retested all-time highs. We did find a nice bounce off the 50-day moving average, and I mentioned last week, as this was on my watch list last week, that I was looking for a pullback to these moving averages on low volume, and then I would be looking to buy off a bounce of these levels, and that's exactly what I did. I am positioned in this stock, and I did buy it on Friday. I gapped down around the 36 level, and I bought on the oops reversal here around the 37 level, and I'm holding it. I'm actually looking to add to my position if we could break out of this base here. So essentially what I'm looking for is a break above the high of the 42 level. If we could get above the 42 level on good volume and continue moving higher, I'll be looking to add to my position. It seems to me that this stock is being very supported off its moving averages, and we did see that it released earnings recently, and it had beautiful earnings. So this is definitely one to watch if it could break out into new all-time highs to see how strong we can move. So that's really what I'm watching for CPE. As I mentioned, oil and gas is one of the top industry groups out right now. So if the group can continue to show signs of strength, CPE will definitely be at the top of the pack. So that's what I'm watching for. And the next stock I'm watching is DE Deere & Co. So DE is in the manufacturing and farming industry group. It's acting very well here as we have this little cup base with no handle. It actually did break out into all-time highs on Friday and was accompanied by good volume on Thursday and Friday. So that's exactly what you want to see in a strong stock. Essentially, what I'm looking for is possibly some inside days or just some low volume days to digest its little move that it had from the 50-day to all-time highs. If we could get some sort of low volume day, I'll be looking to start a position there. However, if this stock just decides to rip higher and just continue to move into all-time highs, I'll definitely keep this on my watch list, but I wouldn't initiate a position. I really want to buy on something that is low volume, find a nice pullback day, especially like this day we had on the May 5th. This would actually been a good day to start a position or even the day after once it got above that high. Something like that is really what I'm looking for around these levels. But like I said, if it just continues to rip higher, then I'll leave it. No worries there. So that's really what I'm watching for Deere & Co. And the next stock I'm watching is my last NASDAQ stock, INMD. So INMD is in the medical systems equipment industry group, and if we take a look at its pattern here, we did find a nice little cup here that broke out and went into all-time highs, and then just recently has been pulling back. We actually we are finding support at the 50-day moving average. It did kind of undercut it, but the next day we did have an inside day, and looks like we are finding some support there. It does have a history of undercutting the 50-day and then moving across it for a few days and then chugging along higher. So I want to see if it could do that again. If we take a look at its prior history, find support at the 50-day, undercuts it, and then rallies above. Once again here, undercuts the 50-day, rallies back above, and one more time here, undercut the 50-day and rally back above. So this is nothing new for this stock. This stock does have superb fundamentals and earnings. So for the NASDAQ stock, I know it is lagging the current market, but if we could find continued support at the 50-day, this could be a good low risk, high reward type of play here, especially for the strong fundamentals that this stock has. So that's really what I'm going to be watching for INMD. If we could find some sort of consolidation for the next few days off the 50-day, just let the volume kind of settle down, let the volatility slow down, and then see if we could start a position to see if we could bounce back and retest these highs. The good thing is your risk is very defined because you want to just put the stop loss right at the low of the undercut level. So if we were to buy, our stop loss would be around the 74 level, and see if we could find ways to make new highs or retest those highs. So that's really what I'm watching for INMD. And the next stock I'm watching is RH. All right, so RH is another retail stock that is in the top 20 industry groups as per IBD. So it is performing really well right now. If we take a look here, it did break out into new all-time highs and has just been recently pulling back on lower volume. So the pullback on lower volume is exactly what you want to see in a strong stock. Did seem to find support at the 10 EMA after undercutting it a few times, and on Friday was a really good possible entry point if you were able to get in this above the Thursday high. But I wasn't able to get into it, so I'm just going to be looking for an alternate entry. Essentially, what I'm looking for is just some continued consolidation, some sideways action. See if we can find another low volume day that finds support at the 10 EMA, and I'll be looking to buy here. Essentially, like I said, I missed the Friday entry, but just because you miss one doesn't mean you can't find an alternate one. So I'll be looking to see what I could find with this stock. As of right now, there's no real entry, but definitely one on my mind because of the fact of how strong this stock is, as well as how strong the group is doing. So that's really what I'm watching for RH. No real entry, but something to keep in mind if an opportunity does present itself. The next stock I'm watching is TPX Temper-Sealy. All right, so TPX is a furniture company with superb fundamentals, and if we take a look at this chart right here, has been trading at a very tight price action for about 7 days here. So essentially what I'm looking for is a break above this consolidation level around the 39.55 level on good volume. If we could really see strong volume accompany this little breakout of this small consolidation, wouldn't be surprised if it could hit all-time highs the same day. That's really what I'm looking for. Very simple. I really like the tight price action action that's going on, especially for over a week of tight price action. It means that, a strong move could be brewing. Earnings won't be for a while, so no catalyst to really watch out for. So if we could just have that strong breakout on good volume, this could definitely be a move that goes into all-time highs. So that's really what I'm watching for TPX, and the next stock I'm watching is WGO, Winnebago Industries. All right, so Winnebago makes mobile homes. They have good earnings and growing sales. If we take a look at the chart here, we do have a little cup base here. Essentially what I'm looking for is a little move above this consolidation handle right here. Essentially a move above the 85 level on good volume is what I'm really looking for. If we could move above that on good volume, then I wouldn't be surprised to retest these highs and essentially go into all-time highs. Very simple. I'm just looking for a move above this consolidation level here on good volume, and I'll be looking to enter. And the last stock I'm watching is WSM, Williams-Sonoma. All right, so WSM is another stock in the retail home furnishing group, another top 20 industry group. The earnings is doing very well right now with continued growth. If we take a look at its chart here, it is basing quite nicely on Thursday and Friday. Thursday had a nice little pivot on good volume, and on Friday had good continuation. This would have been a great entry if you were able to get in at that time. But for now, we're looking for a move into all-time highs. Around the 188.33 level would be the entry point. But essentially, I don't want to buy for a move that goes straight up from here. I want it to digest its move in a healthy manner. And by doing so, I want some sideways consolidation, maybe some inside days, or maybe a small pullback on low volume. And that's where I'll be looking to enter to begin a position. That's really what I'm looking for. There is some strength in this industry right now with retail, so I wouldn't be surprised if this rips higher, but I would really love to see some inside days or just some small volume days so I could position myself in nicely. So that's pretty much it for this week's watch list. I hope you guys did enjoy this video and learn something new. For those traders that are struggling in the market recently for the past few months, weeks, days, or feel out of sync in the market, you're not alone. Don't worry about it. Just move on from it, learn from it, and keep optimistic. You want to stay positive so that you could capture these opportunities that are being given to you in the market. The market's always going to be here. If you need a break for a week or two, go ahead, do so. The market will always be here. So just make sure that you're always putting your best foot forward when you're trading, and you always have a positive mindset. That's the best way to overcome any trading losses, any trading fatigue you might have, and just always come in with a positive mindset. So that's all I have for today. I hope you guys really enjoyed this video. Please hit that like button, subscribe, share with your friends and family. Hope you guys have a wonderful day. Take care.